Hello, welcome to the European Open briefing for Wednesday, April 26th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at the latest developments in the currency markets today. So we still have quite a strong risk appetite this morning, and this follows from the French election results where the centrist Macron is the favorite to win the second round on May the 7th, and the receding fear of a far-right win has strongly helped financial markets, not just the euro, but also equities as well, and it's given the yen a big push down, and that's helped the dollar advance back above the 111 level, and also we have those expectations that the Trump administration will make an announcement on the much promised tax cuts later today. The Aussie and the Kiwi, though, are not doing so well. They're both down this week against their US counterpart. We had slightly disappointing Australian inflation numbers out earlier today, and that's weighed further on the Australian dollar. And also the Canadian dollar is also struggling. It's facing fresh tension from the trade dispute with the US after the US government imposed tariffs on Canadian lumber products. But let's start now with the dollar-yen pair. We can see the dollar has been steadily rising upwards since Monday. It's now trading around 111.40 against the yen. We've seen the US Treasury yields, the 10-year yields also recover. It's now back above the 2.30%. We had strong housing data out of the US yesterday. That's also helped the dollar. But also it's earnings season at the moment in the United States. We had strong earnings results from most US companies. That's helped US stock indices move closer to record levels. The Dow Jones and S&P 500 are near their March highs, and the Nasdaq Composite is already at record highs. It closed at a record all-time high for a second day yesterday. So all of that is helping the outlook for the US economy. And although there are some doubts about the tax announcements that are due later today, whether or not they will be passed, or whether whether the size of the cuts that will actually get approved will be what the Trump administration is hoping for. Nevertheless, that has been helping the dollar this week. There's various reports out since yesterday that suggest that corporation tax will be cut to 15% from 35%, and also the tax on overseas earnings to be cut from 35 to 10%, and that should help US companies bring back their overseas holdings to the United States, which at the moment they're keeping them overseas in order to avoid the high tax rate in the US. And it's looking unlikely that there will be a border adjustment tax, even though that was one of Trump's main election campaigns. But there's still hope that even if there is some delay to the tax cuts being passed by Congress, it will nevertheless at some point of the coming period it will help US growth higher. Moving on to the Japanese yen, we can see both the euro and the pound have been rising strongly upwards. The euro is at a 1-month high, the pound at a 2-month high, and that's mainly due to safe havens becoming out of favor with investors given the improved risk sentiment this week. Also worth mentioning that the Bank of Japan starts its 2-day monetary policy meeting today and will announce its decision tomorrow. They're not expected to make any changes. They will probably strike a more upbeat tone about the Japanese economy given the improving outlook for the global economy, but given that inflation is still far below the 2% target, they are likely to signal tightening anytime soon, even though there have been some reports saying that the Bank of Japan has started simulating various exit options, but that's still some time away. but surprisingly, the risk sentiment hasn't improved, hasn't helped the Australian and the New Zealand dollars. We had inflation numbers out of Australia this morning. Annual inflation rose from 1.5% in the fourth quarter of last year to 2.1% in the first quarter of this year. That was slightly below expectations of 2.2%. There were some hopes by market analysts that inflation would be on the upside, and that's why we saw the Aussie dropping sharply against the US dollar. It's currently down by almost 0.6%. And core inflation in Australia is also still rather muted. It's still below the RBA's 2 to 3% target band, so it's unlikely the RBA will be raising rates anytime soon, even though they're not likely to cut either. And the New Zealand dollar is also struggling. And one of the reasons for that is that there's fears that Trump will or may extend his trade dispute to other countries apart from Canada. Trump, apart from the softwood lumber products, has also pointed fingers at the dairy industry, and if that happens, there's nothing stopping him from doing the same for New Zealand, which is a major exporter of dairy products. So we're seeing the kiwi down by 2% against the US dollar this week, and there's overall, despite the risk appetite overall for commodity prices, they haven't received that much of a boost. So that's generally weighing on the Aussie and the Kiwi. And moving to the Canadian dollar, we can see that USD CAD actually rose to 14 months high yesterday after the US administration imposed anti-subsidy duties on Canadian softwood lumber. There's growing tensions not just with Canada but with Mexico as well. The three nations will begin to renegotiate NAFTA in the summer, so that's likely to weigh on the peso and the loonie for some time yet. We've seen the Canadian dollar firm a little bit this morning. It's being helped by steady oil prices. We saw oil prices end the day higher yesterday for the first time in 6 days. We had and this comes despite the fact that the inventory data from the American Petroleum Institute showed another increase in US inventories yesterday. But given the fact that we had several straight days of losses, we're seeing a technical rebound in oil prices, with US crude currently trading around $49.33 a barrel. A quick look at the euro and the pound now, because the euro is at a 5 months high of 1.0950 against the US dollar, and it's basically still benefiting from the result of the French presidential election, which has sharply improved the outlook for the eurozone, given that there's now less of a risk of political uncertainty. We also had a very strong business survey data out of the eurozone. Also, the ECB starts its two-day monetary policy today, and it's not expected to make any changes. But there is some speculation that the ECB may, in June, start to remove some of its downside bias in its forward guidance, and so overall that's slightly helping the euro as well. And the pound, although it's doing rather well against the dollar, it's still holding above 1.28 following the call for a snap general election in the UK. It's not doing so well against the euro. It's at a 2-week low, and that's mainly due to the euro's bounce, but also some concerns that a Macron win would be negative for the Brexit negotiations. And finally, looking at today's economic calendar, we can see the Australian data out early already, and later the rest of the day is looking rather quiet apart from Canadian retail sales numbers. That's it from me. Thank you very much for watching, and have a great day.